This is video 3 of 3, folks, on the asymmetric trading system. Video 1 was a brief overview of the system. Video 2 was a hour-long step-by-step process of the research and the analyses and the structure that we use to build this asymmetric system. This is video 3 of 3. This is finally now here as we enter the month of March 2021. We've got 2 full months of real world, real account, real money results to go over with you here and give you the sign-up information if this is a program that you're interested in. Again, the asymmetric system, just to refresh you on what we do and how we approach investing in the marketplace. It's a risk-reward ratio of 1 to 3. So it is very risk-focused. We want to make sure that the reward is potentially much more substantial than the risk that we are taking. It's automated trading and it's automated risk management. It takes, depending on how fast you are with your fingers and how nimble you are, somewhere between 3 and 6 minutes at the start of every trading day to get your trades all set up, and then shut your laptop down, walk away. You don't have to look at it ever again throughout the day. It's all auto trade. There is some accretive leverage involved in it. We do leverage about 20% of the account. We set it up with stocks as our primary trading vehicle, so there are almost no fees or commissions if you're using the broker that we recommend. It does work in bullish and bearish markets. We're here on March the 2nd right now, and we have had a couple of, I would say, pretty bearish days in the marketplace, and it works in down markets just as well as it does in bullish markets. Again, the focus is on risk management and positive alpha returns. What do we mean by positive alpha? Well, we just endeavor to do better than the overall market. People ask, of course, generally the first question, well, how much can I make? How much will this trading system make? And the answer is, I don't know. We have no idea, but we do know that we are comparing ourselves against the overall market. And we'll say the overall market, that's the S&P 500. So our goal is to have less risk or less standard deviations, less volatility with better returns. So in essence, if the market did have a horrible month where, say, it lost 5% in the month and we only lost 1%, yep, that's a loss on the month for our program, but we'd be pretty happy with that. Beating the market is the real key. We do use a small synthetic covered call position to sort of help us with that. Gives us an income component to the program that's bringing in money every single week, regardless of whether our directional trades work or not. And we are able to position to cash. You'll notice real quickly here when we go through January's results that there were 3 days at the end of the month that we just stayed in cash because of that volatility. And there is very little overnight risk. There is some. We do hold positions overnight, but it is somewhat minimized. So that's sort of the idea behind the program. Our results from January, you can see right here, we take a look at them. We started the month of January. Here we go. January 4th is when we kicked it off formally here, and you can see we started with about 25,401. Had a nice start to the month, 4 wins in a row, then we had a little bit of a loss. You can see what a rare result this is. 10 wins versus 1 loss. Generally speaking, we are always going to have much greater numbers of losses than winners. In fact, sometimes it's right out of the gate where you'll set up the trade, the market will only be open for a couple minutes and we're already getting kicked out of trades. We love it. That's the ideal scenario because we want to book lots of losses, but lots of small losses. And the tighter you are on your risk management, the less wiggle room you're allowing inside of your investment account, well, the more losses you're going to take, the more frequently you're going to get kicked out of trades. So we love that aspect of the trade. We did have our longest losing streak in January, which was 3 days in a row. You'll see that that got extended a little bit in February. And again, very good on the risk management. Here on January 20th, we had 0 wins and 11 losses. Can you imagine putting 11 trades together in a day and every single one of them loses money? Every single one of them goes against you. That's not too bad of a drawdown on a $26,000 account for having a day like that. Our biggest drawdown of the month was $198, again on a $26,000 account. Not too shabby. In the last 3 days, we did go all to cash as things kind of got a little volatile at the end of the month. Every one of our synthetic covered calls expired fully profitable for us, and that was a big profit driver for us for the month of January. So you can see our numbers in January worked out pretty darn well, about a $1,231 profit for the month on that starting balance of about $25,400. That ends up being about a 4.84% return in 1 month, 58% annualized. Now, again, you can't use annualized in marketing materials. The FTC doesn't allow that, and any of the regulatory bodies, FINRA, none of them allow you to use APR, but it is a good tool to allow you to do side-by-side comparisons with other investments. And again, I think most people would say that 58% APR, pretty darn good, even though obviously we know we're not going to hit exactly 4.84% every single month. Was it positive alpha? Well, it was. Our first month was a success from the standpoint that we brought in 4.84% return versus a loss of 1.11% for the S&P 500. And again, that's the goal. Beat the market, right? 13 profitable days versus 6 losing days. I don't know that anybody would be really proud to push that statistic to the front of their marketing materials. Obviously more profitable days than losing days, but still, that's not a great percentage. But again, it's all by design because we want to take losses frequently and make sure that they're small in nature. So great first month kicking off the program. The month of February obviously is just wound up, and we've got our numbers for the month and some interesting things to see. We did put a little bit more capital into the account, and so we started off the month with $30,515, and it was gangbusters to start off right out of the gate. Nice way to start the month with 5 winners in a row. I think that might be a record for the program. And of course, as you would expect, that is followed up with 4 losses in a row. And that, to date in the program, is a record for consecutive losses in the program. 4 days in a row. This particular day right here, February 9th, kind of my fault. Now, again, we did only have 3 winners and 10 losers, so it probably wasn't destined to be an amazing day anyway. However, one of the trades that we did was on GME, and I just did a boneheaded move. I just made the purchase rather than using it as a bracket order, and so it incurred a loss of much greater than 1% on the day before I could manually exit that trade. And that was, again, simply just an operator error on my part. I don't remember how much of that $228 loss was attributable to just to GME, but I know a good percentage was. So again, just kind of that's how the cookie crumbles, but that was a mistake on my part. So we did have 4 losses in a row there, but you'll see that we bounced back quite smartly here. Now, one of the things with a risk managed account is that we shouldn't be having a lot of big drawdowns. We shouldn't be having massive losses that occur in the account. But we also shouldn't have great gains because if you want stability to the downside, you're probably going to get stability to the upside too, right? And that's what we wanted. But we did have a nice position in our short. And again, this is one of the nice things about this program is that it works in up markets and down markets, and we had short positions on February 12th. One of them was Tilray, and it absolutely tanked, and it hit that 3% margin right off the bat, and it was a very nice day for us. So you can see kind of a big bump there in terms of dollar percentage moves. That was one of our bigger days of profits that we've ever seen in the system. And then just kind of sort of back and forth here, back and forth. Biggest loss, biggest drawdown that we did have was on February 24th, and in hindsight, we probably should have gone to cash there as well, but we didn't, and $375 is in the down phase. And so that was our biggest drawdown. Obviously, all of our SPY anchors over here, once again, all expired fully profitable, and that's been a huge benefit to the program. What was the bottom line in the idea? of our results coming through on February? Well, it turned out pretty darn well. Once again, guys, $2,422 profit for the month on a starting balance of $30,515. That's about a 7.93% return for the month. 95% APR. Again, just crazy, crazy good numbers. Are we going to get 7.93% every month? I'm going to tell you right now, nope, we're not. We're not. That was a stellar, stellar month, but we certainly were positive alpha once again, which is the bottom line goal. 7.93% positive return versus a 2.13% for the S&P 500. Again, 12 profitable days versus 8 losing days. That's not something that you would think you would lead with when people say, how does your investing work out for you? Obviously, again, more profitable days than losing days, but you can see that the key here is the asymmetry of the program. We can have losing days, but the losses are so much smaller than the profits that it works out for us. We don't have to hit a home run every single day in the program. So what's the next step in the program, guys? You got 2 full months of data now behind us in the vault, if you will, and it has been just an awesome, awesome start to the program. Better than what my initial expectations were, to be quite honest with you. We'd love you to come join our team and check it out. Here's the link right here to get signed up for the asymmetric system. And every morning you'll get the research. We also include the research that we put together, the market bias, whether we're looking at a bullish, bearish, or neutral day, and all of the individual stocks that we're looking at trading as well. And this is a trading system, folks, that I'm pretty excited about continuing to focus on for my retirement planning. I am by nature a trader, and I'm looking for cash flow on a daily basis, but this is more of a long-term focus for me. Come check it out if you want to, guys. We'd love to have you on board. I'll put a link in the description below as well if you want to come look at our system.